Switching over to the US CLO market, collateralized loan obligation market, wanted to get your thoughts on this. For the past several months, we've seen the basis in the US primary market between benchmark and non-benchmark issuers. That's been historically wide. But in the last week or two, let's say, it's started to finally tighten. But at the same time, we're seeing credit spreads widen. A week or two ago, there was a deal announced that priced 200 basis points wider than initial dealer guidance and talk in the triple B tranches, the so-called mezzanine tranche of that deal. What do you think's going on with the CLO market? We've also seen, bid wanted in competition volumes at elevated levels in the US this year. 2 days already in the US with over $1 billion in BWIC volume in a single trading day. What's your thoughts on where the market is right now and where it's headed?
For CLO?
Collateralized loan obligation, CLO.
Okay. I mean, I'm not sure. I don't understand enough about it. It's not something that I've done enough homework in personally. What do you think? Maybe I could get a little bit of a understanding.
Yeah, I think it's a historic time in debt markets, and one of the things we've seen this year is high yield issuance has already, so far in the year, already exceeded the total of high yield issuance in the US last year. So at these higher interest rates, with the economy started to pick up at least a few weeks ago, you have more demand from or more investors willing to supply that capital. So deals are getting printed. I think there's a lot of volatility because of the situations with the banks. We saw the Silicon Valley Bank got bailed out. Credit Suisse now having trouble. Signature Bank and a few of those others. That's affecting global fixed income markets. So you're seeing that play out. At the same time, European CLO markets remain much tighter despite a few idiosyncratic events. I've heard news of one of the bigger players liquidating a separately managed account. Another thing that's happening in the US market is Asian investors in particular are willing to buy in at these levels in the US market because it's starting to look attractive. So you're seeing new players enter the primary market, and that to no surprise is driving secondary market activity on the bid wanted in competition market. So that's my thoughts on it.
That makes sense. That all makes sense to me. It's because it would. Well, anything about bank instability would affect that. So,
yeah, especially since banks they participate in bought deals. They're lead arrangers on some of the levered loans that could get put in the CLOs, and then you also have some of the smaller and regional banks as end buyers of that debt. In addition to CLOs. And increasingly, you have non-bank financial institutions stepping into that market as well. Private credit companies, business development companies, and so forth.
Okay.
Yeah, and wanted to get your thoughts on the recent volatility we've seen in equity markets. There was quite a bit of volatility today. The VIX, the VVIX, Core 3M, and Russell Volatility Index all traded up significantly. The Russell Volatility Index is now in the low 30s. I want to say the VIX is at maybe 26 and change at the time of this recording. Vol is back well above 100. It's around 127 or so, and so forth. So, what are your thoughts on the sudden spike in volatility, vol, and correlation in the equity markets? And do you think vol will be elevated for a while, or do you see this as a selling opportunity to sell some over price volatility and pick up some yield?
Right now, I think volatility is going to be around for a while. There's so many things happening right now, so many things that are new and kind of unprecedented, and like such as these lockdowns, these extreme amounts of money printing. And I think that that volatility in most markets is going to be around for a while when there's a lot of people not quite understanding how this is going to affect a full system thing. And there's a lot of people making plays this way or that way, and that will affect volatility a lot, because when there's a lot of disagreement on the future of something, it's going to make the people buying it and selling it for very wide range of prices. And I think that that's where the volatility is generated. Some people think they're going to get rich off something. Some people think they need to just get out now. And because there's no historical trend for this, there's no sort of data we can look back on and see how did this work last time. And it's all very speculative. And I think that there's a lot of uncertainty, and I understand why there's volatility.
Okay, and if volatility is to stay elevated for a while, how should investors think about that when shaping their portfolios? Is there a way to play that as either on the long side or the short side to try to gain alpha in this environment?
Yeah, you know, on the long side, well, you could do both. I think that for the average investor at home, I would probably try to only do the long ones. I think if you're any sort of investor at home, you should not focus too much on short plays unless you have a lot of media connections and you can tank a stock price of a company by you writing some hit pieces on stuff on it. You know, unless you can do that kind of thing, I would advise against doing these sort of short-term plays, because usually you're not smarter than everyone else. And then but yeah, there is some way with volatility that if you can get in low and then you just hold on until it's way above and then sell. But at that point, in my opinion, I would just rather somebody just be consistent and invest in that market over time instead of trying to do this buy low, sell high thing.
Okay, and what if someone, just for argument's sake, wants to go in and out? You know, how would you do that in, say, the crypto asset market? Are there other tactics that one could use in the crypto asset market
Yeah.
to trade? Because I know a lot of our audience is into that market,
Mm-hmm.
for better or worse. So just wanted to hear your thoughts on that.
Well, if you're talking about doing stuff like the trying to get in and out of crypto, there's a couple strategies I've heard, especially with the very volatile coins, the ones that aren't very established, you know, not Ethereum, not Bitcoin, but things, you know, little random coins, that projects that pop up here and there, right? And for those, there's a lot of reasoning to, you know, they are extremely volatile, some of them, and they're also able to buy lots and lots of them for, you know, pennies. You can buy, like, you know, some of these altcoins, you can get, you know, thousands and thousands of them for a couple dollars. And you know, all it takes is for some of those to go, you know, 10, 20 times plus, and you know, you kind of approach it like it's sort of a likely to fail but might succeed kind of thing. And if it does, you can get very wealthy very quickly. Now that's very unlikely to happen. That's just the nature of it. Most of these coins are not going to go anywhere. But also you can play into some of the volatility by investing in these altcoins that are very unstable. And if you're trying to make a crypto strategy where you're trying to amass as large of a crypto portfolio as possible, and most people, if they're doing that, tend to want to be in one of the big coins, usually Bitcoin or Ethereum. Most people go with Bitcoin for this, understandably. And if you do that, what you need to do, I would say, is you can take these altcoins, you can try to buy them at low, just watch them and wait until they go high enough that you think that you can sell you're at a price that you're happy with selling it at, and then you sell it, and then you take that and those profits and immediately convert that to Bitcoin. I know some people that do that. They try to, you know, invest predominantly in Bitcoin. That's one strategy. Like, I feel like though with this specific strategy, it's better to just, it will be more stable to just take your salary or whatever income you have and just invest into Bitcoin instead of trying to do this day trading game. I mean, in my opinion, that would be the smarter thing to do if you have a job and if you have a income that you have money to invest. I would just invest it instead of trying to also spend so much time chasing lines on a chart and just trying to say, oh, it's high enough, and versus all this, that can always be unpredictable. And also, if you're going to buy an alternate coin, learn from me and make sure that you're doing it at the right time. I bought Cardano at like the all-time high when Elon Musk was talking about it, which is the worst thing to do. If you're ever going to try to buy any sort of cryptocurrency thing, make sure Elon Musk has not talked about it. That's a very bad thing because what happens is a lot of people because I invested in Cardano legitimately believing it's a good technology because it is a good technology. But the problem is Elon Musk was talking about how great of a technology it was too, and that falsely inflated the value of it, similar to a Dogecoin situation, where there's a lot of people who really don't know what they're talking about. They don't know what they're doing. And they just think, oh, hey, Elon told me to do this, I'm going to do it, because that's how a lot of people are on the internet. So, and then when I just bought it thinking it was going to be a long-term thing to hold on to. And then it just tanked because I bought it right at the time. At the top, was I wasn't checking Elon's Twitter, and I just bought it because I was like, oh, this is good technology. And since then, I lost I lost like 70% or 80% of the value of that coin since that time, and I sold it off to go get Bitcoin. So yeah, so then this is some of the risk of these altcoins. You look at something and you say, well, man, it's only $1 for a coin. Yeah, but the fact is that a lot of these coins, they'll be like that for a day, and then they'll go back down to being half a cent a coin very quickly, because all it takes is just a little bit of media hype and a little bit of media dishype, and that's how fast it does to destroy those projects. And I would say that overall, the best strategy is just to take whatever money you're making and just put it into Bitcoin consistently, like you would any other retirement fund or investment like that.
Got it. And last question for today, Patrick. What's your thoughts on commercial real estate? We've been hearing rumors of a handful of managers making fortunes by short selling either the debt or the equity associated with this real estate. Do you think it's here to stay? Do you think it's a thing of the past? Are you sort of neutral on it? What's your thoughts on the sort of the commercial real estate, the skyscrapers, and not only those, but the 3 to 5 story office buildings of the world, and all that type stuff?
Well, I think it depends a lot on the cities you're in and a lot of what industries are in those cities. I think certain industries that are like software oriented, these sort of Silicon Valley type industries, are probably going to trend to being more and more remote, more and more not in office buildings like this. Some of them will stay that way. Some industries will always stay that way. And I do believe that the office building has merit, but I think more and more people are starting to go away from that. And that'll always create problems in that's why people are probably short selling it. It's probably the same people that think Zoom is going to go to the moon. And the people that really believe in Microsoft Teams being the office of the future. So, and there's a good argument to be said for that. It used to be all companies had to be in person, but now, I mean, even if 20% of them decide to embrace remote work and hybrid work, that's a giant tank for the commercial real estate market, because now you don't need to make offices for all these people. You just have to go mail them a work computer and a VPN. It's much simpler, and that will absolutely tank that market. And it obviously, for the company, will probably save the companies that decide to do this money too, because then they're not going to have to pay rent or on a large skyscraper office building, and that's not cheap rent. That's very expensive rent, and it could save them money on doing that. It could save them a lot of electricity from having the workers pay for their electricity by working from home and all these other things. And I think that overall will be I think it's not a bad idea to short sell it. I mean, I just think that I think that they'll always still have a tenant. I just don't maybe think you won't be able to charge as much rent in a place like San Francisco in 5 years as you can right now, or definitely as you could have 4 or 5 years ago. That's just where I see it going when more and more people embrace remote work, because it will happen eventually. There's enough industries that you can do it, and it makes enough sense in those industries.
Well, thank you, Patrick, for coming on the show. You've given us all a lot to think about. Our audience is really going to enjoy this one. So thank you for your time, and I look forward to having you back on.
Absolutely, Pete. I was a pleasure to be here. I always enjoy talking to you, and I like keeping up to date with what's going on. And you're pretty informed on these issues, and I like learning from you a lot. So I'm really glad that I had this opportunity, and I hope your audience enjoys. And if they have any questions, I'll try to just leave them in the comment section. I'll try to check them out sometime, and I'll be happy to answer any of them if you can, if they want, and if I'm able to.
Absolutely.
Yep.